Good afternoon. This is Ken Jolliff of BIS Commodities here in Cedar Rapids, looking at your ag trade for the week of December 18th. For the week, corn market was down about a penny and a half, bean market up 21 cents, wheat market down 4 cents, bean meal is up $7.20, bean oil was down about 86 cents on the week. What began as a rather quiet week ended with some of the best trading ranges we've seen in the past few weeks. The trade was totally focused on, one, South American weather, and two, the Argentine new government being put in place on Wednesday. The market ground to some new lows in corn, recent lows in beans and wheat. The government down in Argentina did come into place on Wednesday afternoon. They did announced that they were going to withdraw the export taxes on corn and wheat. They did announce also that they were going to reduce the export tax on the soybeans from the 35% down to 30%. And then they come out and also allowed their peso to float on the world markets. Thus it sank about 35 to 40% on Thursday. This drove all the commodity markets down to these lows that we just discussed. Corn in particular went down and made a new low for this move. And then we did see the markets Thursday midday start grinding back. Corn market came back to near unchanged on that day. Bean market came back up higher. I think the market, as it got down to the lows, kind of ran out of sellers. We've got to remember that these managed funds are short this market. They have not covered all these positions yet. Maybe they do by the end of the month. Time will tell, but I think we came to the level where they didn't want to be add to their short positions at that time. And we also saw the bean oil bean meal spread that was being done, being long oil short meal, during the time frame of the biodiesel talks in Washington, be unwound to where they bought meal and sold the oil. So I think that gave some support to the bean complex. And brought us back up to these higher levels that we are at here at the close as of today. Looking at the cash markets, some interesting things going on in there too. We know the export markets remain rather slow. Export inspections this week were at the lower end of the estimates. The sales for this week were at the lower end of the estimates. Now we continue to see China in the bean market, particularly in the last couple of days. There were some announcements on the daily sales schedule of beans being sold to unknown, beans being sold to China. Probably not a real surprise with the future prices at that particular time at the lower end of the trading ranges. So we did pick up some business there. The other thing we're seeing in the cash trade, and particularly here in eastern Iowa, the mid-Mississippi River and points east of here, we've seen some rail rates go into place, particularly coming off the Burlington Northern, originating grain out of Minnesota and the Dakotas. Now, this grain typically would go to the Pacific Northwest if we had some strong export markets, in which we don't. Thus, the supplies up there, which is some of the cheapest basis grain on hand, the railroads have put rates into place to come into eastern Iowa, St. Louis, and points east of here, allowing some of that grain to come into the areas that we typically look to market some of our cash grain in. What it's done is actually backed the basis down some, in this part of the trade. It's allowed us to, the buyers to source some other areas that's got some cash grain either on the ground or hedge grain that needed to be moved here by the end of the year. The other thing you've seen in the cash trade is because of the extreme warm temperatures we've had here across the Midwest, there's been no transportation issues like we typically have with cold and the snow. Thus again, the railroad industry is moving quite freely, the trucking industry moving quite freely, and of course the Mississippi River, mid-Miss and south, is moving freely. So that again may put some additional pressure on the basis levels as we move forward into the new year. Looking at the weather real quick, the Brazilian weather, it's been kind of a mixed bag here this week. There's been some forecasts of better chances of rain in the northwest parts of Brazil. Time will tell on that. With this trade as heavily short as they are, if there's any concern over some dryness, particularly in that area up through there, it could cause some additional short coverage as we move into the Christmas week, and that'll be watched fairly closely. We need to put in perspective, that area of Brazil may amount to only, say, 15 to 20% of their total growing capacity. But as we are trading these prices at these levels, it'd be easy to get some sector of the trade wanting to focus on that and maybe take us back to the most recent highs here, in the soybean market if that transpires over the weekend, and if we come into Monday with, a lack of rain in that particular area. Again, as far as the central part of the Midwest, it appears that we're going to go back to above normal temps. We're going to go back to where we have rain rather than snow. As I said, that's going to keep our transportation system about as flowing as freely as we have seen probably in many, many years, through this. So the livestock sector this week, when you're looking at the January feeder contract on cattle, down 275, the fat cattle down about 43 cents, hogs down 385. We did go down and post new lows in both the cattle sectors of the trade. And then we had this limit up move here, today to bring us back out of those sectors. The cattle on feed report this afternoon, on feed was estimated at 100%. That's where it came in at. Marketing was estimated at 104, came in at 103. The big surprise here was on the placements. Placements were estimated to be at 95.9, came in at 89%. One would say that as we come into Monday's trade on the cattle, even though we had the limit move today, it could be supportive to start the trade out next week. And we will have to come back and take a look at what the cash markets are going to do to see if they follow this futures market at all. But as we're well aware of, when you look at the cattle market in particular, it's been one that seems to want to trade in limit moves more than anything else anymore. Which probably is unfortunate when you're looking at a liquidity part of the market, but we've had more limit moves here in the past few weeks than we've had actual just quiet sideways trading days. But we'll take a look at that as we come into next week. Remember now, next week's markets are shortened because of the Christmas celebration on Friday, and of course then the following week will be a shortened week also because of the New Year's. So we could create some volatility there, into our markets. So with that, I wish you a Merry Christmas, as I'll be out next week. The boys will be here taking care of things. We'll look forward to celebrating the Christmas festivities with the family and then going to the New Year. So thank you. Oh, come